Today's event is part of Spark Festival, which, as many of you know, is one of the premier events, startup events here in Australia. We also have an audience joining us from Southeast Asia as well. And the panel that we've pulled together today has a truly international feel to it. So investment experience and investments in both the Australia and New Zealand area, but also extensive experience into the US, but also into Southeast Asia and India as well. So we're super excited to have such an awesome panel to come together today. We have just been through our own funding round recently with Cake, and that involved us actually tapping into global capital markets. Our lead investor is out of the US. So we've actually been through the journey ourselves over recent months of tapping into international investors for our startup funding ourselves. So we thought it was a great opportunity with this event is bringing together a panel to really talk about it, because it's a very dynamic space at the moment. And there's a lot of change going on, and obviously there's a huge amount of interest and activity in startup funding at the moment. So with that, you know, and Kate's involvement in helping facilitate and really help streamline early stage startup capital funding, we thought it was a great topic for us to actually facilitate the panel today, bring people together, both to be part of the Spark Festival, but also to actually provide some really unique insights to founders out there who are actually looking to tap into and actually the best ways to actually get startup investment. So with that, I'll hand over to Lauren, who will facilitate the event. Thanks very much for joining us today. As Lauren will say, I'm sure we want it to be interactive, so feel free to ask as many questions as we go through. Thanks.
Thank you so much, Cal. And yes, it's a pleasure to be here. Before we jump in, I wanted to acknowledge the traditional owners of the land that I'm joining from today, the Gubbi Gubbi people up in Queensland, and I pay my respects to the elders past and present. Obviously, we have a fairly international panel, but also can see all of you joining in from different places across Australia and even the kind of Southeast Asian region. So welcome to everyone. And actually, I saw somebody from LA, so half your luck, very nice. So I want to introduce all of the wonderful people that we will be hearing from today on this particular topic of global trends in startup funding. This is quite an incredible panel. These people have depth of knowledge across our local ecosystem here in Australia, as well as you know, US, across Asia. So we're really going to benefit from their insights, and we'll have a pretty juicy discussion. So with that, I'd like to introduce Peter Hoon, who is co-founder and partner at Qualgro VC. They invest in Series A and Series B across thematics like SaaS, data, AI, across the Asia-Pacific region. Some of their portfolio companies, which are more familiar, Bright, Neura, and Vend, to name a few. And of course, Peter flies the flag for mindfulness across the Australian venture and startup ecosystem, for which we very much appreciate him. Thanks, Peter, for joining us. We also have Alicia Mcdonald, who's recently been named partner at Airtree VC, one of Australia and New Zealand's largest funds, with over $500 million under management, and portfolio companies including TidyMe, which Alicia was particularly close through all the way, Regrow Ag, and the recent investment in Rejig, which you might have read about last week. Alicia's also partner at The Fund, which is a global community of founders and operators investing in the next wave of entrepreneurial talent. And I'm sure Alicia will be able to touch a little bit on the fund's mission as well. Thanks, Alicia. We have my colleague and friend, colleague and friend Michael Tollo, principal at Blackbird VC, with a portfolio obviously of over 80 companies, including well-known names in the Australian startup ecosystem, Canva and Safety Culture. And more recently, since joining Blackbird, Tollo's led investments in Carted, Oscar AI, and PsyQuantum. Thanks, Tollo, for being here. And Shwetank Verma, who is managing partner at Singapore-based Leo Capital, bringing the perspective of investing in India and Southeast Asia. And at Leo Capital, the focus is really on health, insurtech, and fintech startups. So some great thematics to start with there as well. And last but not least, our co-facilitator or co-presenter partner on this event, Jason Atkins, co-founder of Cake Equity, who's here to share, I guess, the investing side of the story, but also that founder perspective that he can bring through his experiences with Cake. So thank you, Jason. So we might kick off just to get a bit of a lay of the land on the funding landscape in the Australian region, maybe Australia and New Zealand region, if we can stretch to that as well, because there's a symbiosis there. Looking at the state of funding in Australia right now, but also what that looks like in the context of the global movement of venture capital and investment in startups. So Jason, from your point of view, I guess you see kind of an internal dashboard of the money that's moving around the Australian ecosystem for a large number of early stage startups who are using Cake's platform. What can you tell us about the volume of investments happening over, say, the last 1 to 2 years in our market?
Yeah, thanks, Lauren. Lots of our customers raising. The cap tables are getting a workout at the moment as they're hiring too. We recently hit $5 billion worth of startup value on Cake, which was a pretty awesome milestone. And looking around Australia at the moment, it's not hard to notice that it's exciting times. I think September was the biggest month ever in Australia with, from what I could see, over $1 billion invested into Aussie companies. To give some perspective, according to Tech Board, in the whole year of 2021, $4.3 billion was invested, and in September, we had over $1 billion. So, huge year, huge month. Australian VCs are raising record amounts. New VCs are coming through. We now have venture debt becoming more of an option as well for Australian companies, and I know that's part of a global trend as well. One incredible stat, that I'm able to share is, from stats that we've seen from different sources, there's almost a 60% increase in the size of the round from last year to this year, up to about $11 million. So really does show what's happening, at the company level. And some good news, I guess, for the first round as well, where we have been having some difficulty in Australia. The number of deals in that 1 million and 1 to 5 million range were relatively static, from 20 to 21. And so after a decline in recent years, it's great to see stability in those earlier rounds, and that the work going on in the community, to bolster this seems to be working, which is great. And I guess on the other side of things too, when it comes to exits, IPOs in Australia for tech companies have jumped from 8 in 2020 to 25 in 2021. So, really across the board, some great signs in the Australian ecosystem.
Some big numbers and yeah, fantastic news to see. We've not even slowed down in momentum, but actually increased in momentum over the last couple of years, which has been, extraordinary circumstances given COVID and everything like that. Alicia, from a venture perspective, what have you seen through this time particularly? Have you seen more deals coming to you, or, the same number of deals, just more investable deals? What's the nature of the startups that you're seeing and seeking investment, especially at that first round?
Yeah, I definitely think, the broad trend is that the quantity and quality of startups coming out of Australia and New Zealand has increased drastically. If you look at I've been at Airtree for 5 years now, and the shift just in that period is phenomenal. We released a chart a few weeks ago looking at the companies coming out of ANZ valued at over 100 million, and you look at that sort of the building up to the right, and just the number of companies is just so awesome to see. And then fortunately what's also matched that is the size of venture capital available to support our most ambitious founders. So we go back to when Airtree was founded in 2014, I think the entire venture capital raised in Australia in that year was around US 200 million, and now last year that was 1.2 billion. So a 6x increase. And I think, we need that to match the quality and quantity of startups coming out of this region, which is really exciting. So I think the additional capital is great for founders. I still think there's room for more. We're still in the bottom half of OECD countries when it comes to venture capital dollars as a percentage of GDP. But I think we're very much playing on the world stage now, and a big theme of this talk will be about the sort of international capital also coming into Australian founders, which is a great thing.
Yeah, and I will jump to that next. But Alicia, I just wondered if you could comment on what are the markers of quality that have changed so dramatically over the last 5 years? What are you seeing in the caliber of founder coming to you?
Yeah. Yeah, so I think one thing is ambition. I think is being able to see the examples like the Canvas of the world, you know, US 40 billion was the last valuation, having those, realizing that the prize is getting bigger and bigger, and realizing there's no reason why Australia founders can't punch well above their weight on a global stage. We've seen that happen in many circumstances. I also think we're just starting to see the benefits of having a more mature ecosystem, in the sense that talent is starting, you know, has come through the ranks of these earlier breakout success stories in the tech world, and then they're going out to create startups themselves, or they're going out to become the next generation of angel investors. You talked about my association with the funds. That essentially the LPs at the fund, the investors in the funds, are the tech founders and entrepreneurs who are willing to give back to the next generation, both through capital and expertise. So I think we're just seeing the sophistication increase, either through repeat founders or through the talent that they're able to build around them, having more experience in scaling tech companies on a global scale.
Yeah, and I mean, Michael, I'll come to you. It feels like the secret's out. Obviously, everyone's realized that Australia is a pretty good destination to be scouting for that next wave of talent. We've seen a number of deals happen over the last year or so to the Australian venture community's dismay, where that they haven't even actually necessarily surfaced locally, and they've gone straight to raising internationally, you know, which is neither a good or a bad thing. I think it's fantastic for all those founders. What do you think is the biggest kind of point of interest for international VCs, or how are we seeing their kind of entry into the market?
Well, so, I mean, at the risk of stating the obvious, the fact that there's more capital available for Australian startups than ever before is a phenomenal tailwind for the whole ecosystem. And you're right, a meaningful amount of that capital is now coming from offshore. But, you know, the market to fund the highest quality startups is global. It has been global for some time, and we're absolutely part of that. I think there's probably two threads that are worth pulling out a little more. You know, the first is probably the extent to which the interest from offshore firm validate the quality of the companies that we're building. I don't think we've ever needed external validation, but the level of interest that we've seen, especially recently, is a signal of the progress that we continue to make as an ecosystem. So, you know, where we sit on that maturity spectrum. You know, the best in Australia is absolutely the best in the world, and we should be proud of it. I think the other thread that's worth pulling out is how domestic firms respond to that increasing competition. So in my mind now is really the don't rest on your laurels moment for domestic venture capital, you know, which is really additive for founders. It's, you know, capital markets are deeper, they're more efficient than they were 2, 3, or even 5 years ago, which improves access. And it creates this impetus for domestic firms to consistently improve the quality of the products that they offer to founders. For me and for us at Blackbird, it's just consistently challenging ourselves every day to be, you know, more thoughtful and understand more deeply our founders, those that we support, their businesses, their customers, to provide richer community experiences and to provide a level of service to founders that, you know, really accelerates their path to success. So, you know, in many respects, it's, you know, living the business building journey of the startups that we support along those founders. So, I mean, without reservation, this is the best time to be a founder in Australia.
Fantastic. And Alicia, I know you probably have a comment on that, but I just want to make sure that I can come to Peter and Shwetank as well first. I'm interested to zoom out actually, because there is like layers of competition here. The Australian startups are competing for funding, you know, amongst their peers. The US VCs are here kind of out competing in some cases the Australian VCs, or that's the tension. But of course, the Australian startups are in this regional landscape as well, and they're very much competing at a regional level for some of those international dollars across the Southeast Asian region. Of course, Shwetank, you're based in Singapore, but investing across the region more broadly. You don't necessarily look at Australia, but what do you see the differences in the kind of caliber of the founders, or the fact that the international money is also being funneled into those markets as well?
Yeah, thanks, Lauren. Great question. We've had one investment in Australia, a company called Cover Genius. Have some exposure, but yeah, it's our deal flow in Australia is the weakest at the moment. I think what you know, what sort of, as a venture capitalist for us, it's easy to sort of underwrite large domestic markets for B2C plays like India, Indonesia, Vietnam, etc. And with Australia, we haven't seen those many B2C plays, but the opportunity for, I think, B2B plays that Canva, etc. have proven out is large. And I'm excited about the SaaS scene that is emerging in Australia, and love to sort of learn more about some of the SaaS founders and the kind of companies that they're building. In terms of cultural differences, I think just they're very different types of entrepreneurs, right? It's slightly controversial, I guess, to say this, but like, India is a bit of a desert in terms of resources and ability to get things done. So people are very pushy, very entrepreneurial, and they go very far on very small amounts of capital. As you go up the sort of cushiness scale, so to speak, right? People need more capital to achieve the same kind of outcome. There's nothing wrong or right with that. I mean, sometimes it's about the end size of the end business rather than the immediate amount of capital that is deployed. But I think that's one thing we see a lot in the Indian entrepreneurs, is sort of just incredible hunger. But we've started to seeing that more and more now in the region, and I think it's being exported, and that's something we're excited about.
Yeah, interesting. So it's both a scale of the opportunity kind of metric for you in terms of the fact that the B2C opportunities in the kind of Southeast Asian region are obviously much more enormous than Australia, and we haven't typically done those things well, but we are starting to prove our ability in those areas, and then of course the capital or resource efficiency of founders in the region, which makes a lot of sense. And Peter, you also kind of straddle both worlds. What is an Australian founder doing to get your attention over and above a founder in the broader region or in Singapore?
Yeah, it's an interesting question. I think we're looking for very similar characteristics, whether that founder is in Australia or in Singapore or in India, which is, in relation to the resources that they do have available to them. To what extent do they max out on those resources? How are they able to hustle with what they have to achieve as much as possible? And how sort of sharp are they in execution on all of those elements? So I think that's the same, irrespective of which country that that founder is from. And I would echo this sort of thinking from the group around the level of ambition that I'm seeing, not just in Australian founders, but founders across the region, is increasing. It has been sort of maybe regional or local in nature, and it's becoming much, much more global. So I'm spending about a quarter of my time at the moment speaking to founders based in India. We're primarily a SaaS investor. We've led a couple of A rounds in India over the last year or so, and the ambition is absolutely global ambition. Some interesting data points here around that. First half of last year, approximate sort of total funding for SaaS startups in India was about just over 5 billion. First half of this year, it increased to 10.8 billion. It's an astounding increase. Now, most of the customers of those companies are customers in the US, customers in Europe, customers in other parts of Asia, other than India. And so, it's just a good example of the scale and the ambition increasing from a local or regional nature to a global one.
It's fascinating. It certainly is a very good time to be raising if you've got that right level of global ambition, because the world, our view on how we should be operating in this context has shifted. Alicia, I just wanted to jump back to you to see if you had any thoughts on, I guess, this presence of international investors into Australia. How does Airtree see that? And is there kind of collaborative opportunities emerging through having a larger investor from the US coming into our market?
Yeah, 100%. And this is very interesting to see the shift that has happened just in the last sort of 18 months. I remember having conversations with a large number of US funds at the start of 2020. It was meant to be face-to-face meetings when I was going over there for SASTA, and it turned into Zoom calls. And at the time, a lot of the investors would position it as, we'll look to international companies or Australian-based companies, sort of Series B and beyond. And the way that is shifted just with COVID sort of breaking down barriers and investors on Sand Hill Road realizing if they're having a Zoom with someone around the corner and they're having a Zoom with someone in Australia, there's not a huge difference. So there has been a big shift in that, and I think we've already touched on the fact that that's amazing for Australian founders to have more options, and particularly when they have global ambitions, to potentially have a partner on the ground in those global markets to help them with that. A trend that we're seeing across our portfolio is there is still very much a desire to keep, tech and product teams local because of our very generous R&D rebates, but to have a global go-to-market, and that's always been the case, and now it's just pairing that with support on the ground through an investor. I think what we're seeing is that we've got quite a few. I think it's over 60% of our portfolio has international VCs on the cap table. So it's something that has always been there, but more of a trend recently, and it's great for us. They look at our portfolio as a potential signal, and our portfolio companies benefit for that in the sense that they get, in some cases, very, very large checks beyond what anyone in the Australian market could write right now to help them scale up and really compete on the global stage. And I think the really interesting trend we'll see over the years to come is as more and more Australian funds start to return capital to their investors, these large US investors who can write very large checks start to present a liquidity option. So there's actually a way to return capital to the investors in these funds without sort of going through an IPO or an acquisition. You actually can have a secondary transaction, and that's a real trend that we've started to see recently. But I think overall, more capital flowing into Australian founders is a good thing.
Is it fair to say that it is later stage by the time that the US VCs, or are they actually hunting around at that seed and early stage? Anyone feel free to kind of comment on that front. But yeah, Alicia, did you have any thoughts?
Yeah, I mean, I think the international VCs would like to play as early as they possibly can, and we're seeing that trend where they're playing earlier and earlier. My view on that is when you have a 30-person team on the ground in Australia building relationships with founders at the very earliest stages, it's very hard to compete with that, with having sort of one person on the ground scouting for opportunities. One example in our portfolio just recently is we pulled a number of Google engineers out of Google to start a company. So we invested in them pretty much before anything was even incorporated. And within a number of months, they had a term sheet for a follow-on round at a significant uplift from a US fund. So whilst they want to be there at the early stages, to Michael's point, the stay hungry, stay humble point for Australian VCs is to meet the best founders at the very early stages.
Tola, did you have any thoughts on that as well?
No, I think it's absolutely right. I think, the most sustainable competitive advantage is, a deep relationship with the founder, built in deep understanding of what they'd like to achieve. Yes, it is an advantage that we're on the ground. Borders will open up at some point, and it wouldn't surprise me if those foreign firms have more feet on the ground here. So, I think it's continuing to do what we've done well to this point, and then just that continual exercise of testing, retesting, improving, and challenging ourselves to do that.
Jace, just will throw to you as well, because somebody's asked in the chat, Richard, thank you for the question, Richard, about the pros and cons of raising international money versus local money. Now, you've had some recent experience with international money as well as local money. Would you have any kind of words of wisdom or thoughts around the pros and cons of either of those options?
Yeah, thanks. Absolutely keen to share. I guess so the context on that. So we've just completed our seed 2 round. We had a US lead investor. So I suppose I'm still learning. And as my role in Cake as well, we've recently started operating in Singapore and soon to be in other markets. So we're very much learning about how to, assist our customers, as they go, or in different regions. From a regional perspective, what we're seeing is, a lot of similarities between the ecosystems. So for Aussie founders looking at, say, India or Singapore or even the UK or the US, there's a lot of similarities in the way the ecosystem seems to run. The legal agreements are very similar. There are some differences. The way your cap table is going to run is very similar. There's accelerators and VCs and angel investing. And so for the founders on the call that haven't really looked outside of Australia, I think, you should have some confidence that you are going to be able to understand what's going on. On the other side of it, with regard to, which investor to go for and how the different investors sort of work globally, I think, it always comes down to, as you know, Michael and Alicia have alluded to, it's really about the individual investor. In a lot of cases, there's a strong relationship and bond normally formed between, you know, the companies and the founders and the investor. So it's really about finding the right investors. Sometimes they're not in your country, sometimes they are, but they need to have conviction in your industry, in your niche. They need to have the time and space and skill to support you. That's the ultimate thing as a founder that you're looking for. It also depends on your stage as well. What we found, you know, going through our multiple rounds and talking with founders, very, very early stage rounds much more often stick within the country where the company is founded, as Alicia said, although it's, you know, the international investors are getting it earlier. We're seeing that as well, but it is more difficult normally for an, you know, say an Aussie founder to get, you know, Singapore or US investment without some interaction with that region. So I think looking at where your customers are, where your operations are, and where you're generally going to be, you know, working and looking for investors that have connection to that is quite important. And even looking at the mandate of the investor, and because sometimes they're actually mandated to invest under certain rules and in certain regions. And so just do your homework and it can really, really help make sure you get the right investors and don't waste a lot of time. And I'm just going to stress, and I'm sure every founder on the call knows this, capital raising is so time consuming, unless of course you're one of these ex-Google executives or whatever and what have you. And I'm stoked for them. But like for most of us, like it's super, super time consuming. So do your homework and try and work out who the likely people are that are going to want to back you, and it's going to make your life a hell of a lot easier.
Just wait till you see how easy it is for those ex-cake executives in 10 years' time, Jace. You'll be cursing them.
That's what I keep telling my team. I said, just stay long enough and then we can all do that as well. So we're doing our best.
Awesome. Well, that's a great springboard. I want to dive into what I think is probably the most interesting thing to really chat about all together today is, I guess, the thematics, the mandates that are of interest. Obviously, globally, there are some popular topics at the moment. There always are kind of the flavors of the month, some of them more enduring than others. Before we kind of go with the ones that, you know, are definitely getting their airtime on Twitter and the like lately, I was interested to go back to you first, Peter, just around, I guess, the kind of regional side of things. You know, does the regional investing in Southeast Asia and India follow those similar VC trend thematics? Obviously, there are some real strengths in that area around fintech and SaaS that are more popular. What do you see around the kind of hype cycles of thematic trends in the regions?
Yeah, I would say that in relation to hype, the region may be slightly further behind than what we see in the US and Europe and even parts of Australia, New Zealand. SaaS and fintech is still, you know, the area of most interest across the region. I think it's worthwhile for the Australian audience to understand this. I mean, there is a notion of Australia being a fantastic, you know, and New Zealand as well being a fantastic market for producing wonderful SaaS companies. Imagine that happening in India, and it's probably the one of the biggest trends that I'm seeing at the moment. So I mentioned that I'm spending quite a lot of my time speaking to founders in India. It's worthwhile just to note that. So I'm just taking some data points here, but there are about 1,000 funded SaaS companies in India at the moment. 10 of them are valued over $1 billion. This is from July 2021. We've had these sort of IPOs coming through, Zoho, most recently Freshworks in the US. And what I'm noticing is international investors, and Insight is quite an active, probably the most active of the large US funds investing internationally. They're investing, you know, much earlier in these companies. So at Series A, a company called Atlan, which is a wonderful data company in India. Another one, Darwinbox, which is led by our friends at Salesforce Ventures. These are just examples of Indian SaaS coming into this new, almost sort of golden age. And I'm almost sort of imagining an armada of, you know, incredible SaaS companies with really thoughtful product execution, most of the customers being in the US and being able to sell into US customers from India. some of the amazing things that I'm seeing. So imagine a pre-Series A company or pre-Series A SaaS companies providing 24/7 customer support through various channels or even within product itself, and with a product cadence that is just producing incredible roadmap over a 6 to 12 month time frame. It's really hard to to compete with. And just like Canva, you just would not know that these companies are not Bay Area companies. So that's coming through. And just to quickly touch base on another thematic that is really picking up across the region, continues to do so, which is fintech in Indonesia. It's a huge domestic market. We've got some really big rounds over the last even 2 months. There's a company called Zendit, which is a lending company. They've raised 150 million in their last round. And they're valued at over $1 billion now. There's another company which is called Ajaib, which is kind of like a Robinhood for Indonesia, recently raised 150 million about 3 weeks ago. So fintech is starting to come into its age in the region, not just in Indonesia, but sort of led by Indonesia at this point in time.
That's fascinating. And do you think that the Australian founders in these kinds of thematic areas or industry verticals have this awareness, because ultimately they are going to be competing? Their assumption is probably, and then we'll expand into, Southeast Asia or India or the US. Is there a bit of a disconnect with the scale and speed at which companies across the region, based in India or Singapore or Indonesia, are actually moving? And will that come back to kind of bite Australians in these thematics?
In a way, I think that the recognition or understanding that this is happening right now, particularly in India, probably isn't there. It's very well understood in India, of course, and also great to get Shwetank's thoughts on this as well. But also in the US, we've got, I think Andreessen setting up in India alongside a whole bunch of other funds from the US setting up in India. But I think that this sort of this armada, as I call it, of companies, from a competitive standpoint, is going to sort of challenge Australian SaaS founders competing in those same markets, because it would be difficult at the moment for a pre-A Australian company to, for example, just as an example, provide 24/7 customer support to even trial customers, right, at that life cycle stage, because the unit economics just wouldn't make sense. So this is something to be mindful of.
And even expanding into
that,
even expanding into those regions would be a lot harder from this side as opposed to the other way around, right? So Shwetank, I'd love to get your take on that specifically as well.
Yeah, I mean, we're seeing a lot more actually Australian, at least CVC action, Telstra, etc. have started seeing those guys come in. And I think to the earlier point, as local VCs, you really can't rest on your laurels. We're seeing this action in India in a very dramatic fashion at the moment, from Insight, Tiger, you name it, right? Sort of founders have options all over the shop now, and it's the competition has gone to pre-seed. So we, for instance, in SaaS companies especially, right, we're competing against Silicon Valley VCs at the pre-seed level. These are three kids with an idea or 3 people with an idea. And originally these things would have just come to the local VCs, would have never gone out. And now Y Combinator's all over them, all sort of the pre-seed Valley VCs are all over them. And you have to really create a differentiation to win. And I think in SaaS especially, it's hard because SaaS companies can be global. Your local benefits are just that much, right? Yes, you can help with a little bit of recruiting, etc., in the local market, but ultimately there's a global mindset, and founders are rightly seeking VCs that can help them with that sort of global expansion. So it's interesting times for founders in SaaS companies. Great time to be there. I think for the Aussie founders, the right thing to think about is how do you start using the benefit of some of these emerging markets like Philippines and India to add to your service layer, to add to your ability to do inside sales, etc. Some of the best companies we've seen have started setting up shops in back end or sort of especially inside sales functions in India at a much earlier stage than they would earlier. So I think that's something that has changed quite dramatically over the last 2 years, where earlier you would not see something below a Series B thinking about setting up an India office. And now we actually see seed people sort of thinking about, hey, can we have 3, 4, 5 people in India? And I think that's a good idea.
Yeah, that is a huge change, but it makes total sense. And in terms of, I guess, the broader thematic areas and the things that are being hyped right now, I guess Web3, to just pick one randomly, gaming. I mean, gaming is probably something that you might be seeing a bit of. Is that something that you think there is potential strength for in the region, or you think that the more fundamental building blocks around health tech and fintech are going to win out on that front?
I mean, there's so much opportunity that I don't see why you'd not be able to have multiple companies win in all of these sectors. Of course, with Axie's latest round, we've seen a lot of interest in play to earn gaming. I think the number of inbound pitches on that has gone through the roof. But I think these things are cyclical. They will come and they will go. And gaming will remain, I think, a core part. And we'll see some interesting companies built out. We have some great companies in our portfolio in that space. And the sort of marriage of gaming and crypto is certainly going to see some interesting companies built out. But in the long run, health, these are large elements of GDP. A lot of customers are still massively underserved. And you will, by definition, see large companies built in business. So those are potentially the safer bets, while some of the more interesting things like gaming, play to earn, etc., are perhaps faster rocket ships, but with more of a binary outcome.
Yeah, fascinating. And I think the interesting thing about right now and some of these particular topics like DeFi or Web3, gaming, they really are global competitions from day one, right? So it doesn't really matter where any of these companies are coming from, and the setup costs and the way you think about expanding a SaaS business is fundamentally different. I'd love to kind of throw the question a bit wider in terms of what are some of the things that are capturing all of your attention generally. Maybe I will jump to Tolo first.
Yeah, so I think for me, front of mind at the moment is this incredible unrealized opportunity in domestic deep tech. I think that in Australia, we've consistently produced these world-beating technical talents, and that's across a pretty wide range of domains. Whether it's quantum physics, whether it's physical chemistry, applications of Symbio, diagnostic platforms. The list does go on. We've got phenomenal academic institutions and the heritage, but still, that conversion rate of our best talent into entrepreneurship is still really, really low. And the path for academics to commercialize their work and access venture capital is in many respects still quite unclear. So, I mean, the task for us at Blackbird, something we're focusing on quite a bit is, to define a new set of rules and a new infrastructure that allow those top decile academic performers who, just quietly are, either as good or better than their peers in the US, the UK, and Europe, to build these large consequential companies that do reshape the world for the better. So that's kind of at the highest level of abstraction, but, more specifically, it's, absolutely, the early stages of this revolution in computing and biology. The two do intersect in many, many ways. So it probably wouldn't surprise you for me to tell you that I'm spending most of my time on quantum computing and synthetic biology at the second.
And just to go a little deeper on that, what are we seeing enough? Are you seeing enough in that area that's interesting? And what do you think the time frame is before we see, the critical mass that we need to really get a foothold in this industry vertical in Australia? Because again, this is a globally competitive space.
So, I mean, based on conversations I've had with, academic department heads, sort of senior and mid-level, academics, I think that we're only seeing the smallest fraction of the potential for what we might see. So it's really just the exercise of improving that conversion, figuring out where the blockages exist, working to unblock them. It's the delta between, what we currently see and what we might see, which is the opportunity. So, in short, to answer your question, we see quite a bit, but I think, there's orders of magnitude growth for us from here over the next decade. And I think that's what I'm really, really excited about.
Yeah, awesome. Alicia, what about you?
I mean, I still think that I can talk about some emerging themes, but I still think that there's a lot of opportunity for software to disrupt a whole range of industries. So I think it's easier now sort of bubble to feel like there's so many industries that have already been disrupted, but you look at Canva in design, and there was Adobe there before it, so it's sort of software eating software, and there's so many more sort of big boring industries where there's still a lot of manual processes and still a lot of area for efficiencies and improvement. So I'm quite bullish in that sense. We're very interested in the trends we've already discussed around DeFi and the broader Web3 trends. And I think globally that has been a very strong theme this year. You look at sort of the funding flowing into crypto over the last, this year. It's like $18 billion, I think, which is 6x. It is the last 6 years combined. So the momentum in that space and the interest in that space on a global level is, if you spend much time on Twitter, you're probably inundated with it. So there's a lot of momentum around that, and we're spending a lot of time in that space. We're very bullish on DeFi more broadly.
Just back to the point you made around like industries ripe for disruption. There are the obvious ones like health, which has been a long and ongoing challenge, given the fax penetration is still quite high in the industry, for example. Is there any other industries that particularly jump out as interesting for you that are on the edge of this kind of disruption?
Yeah, I think there's more that I'm passionate about where I think there should be more done in that space. I think elder care, aged care, disability care, there's so much in that space. And I think through COVID and how social isolation has only been increased, and we're in an interesting period now where, Australia in particular, we've got a very much aging population and a subsector of people that are now have been sort of digital natives will become the elderly very soon. So how can we make the most of that opportunity and use technology to really improve the human experience there? I think that's something super interesting. I think agriculture, there's so much more we could do around that, and the link to climate change and the impact that can have on the world more broadly. I think there's a lot we can do with technology there. You touched on Regrow, which is one of our investments in this space, and something that I'm very passionate about. So I think I could probably rattle off every industry in terms of where additional disruptions will come from technology and additional improvement. And I think we've been very lucky over the last 18 months. It's been, there's been so much disruption in so many ways, but also it's helped our industry kind of accelerate change, particularly like we think about health tech. Things that may have taken 5 years have been achieved in the space of 5 months. And there's a lot of tailwinds on the back of that to improve the adoption of technology and improve a lot of these industries for the better.
Fantastic. Peter, what's catching your eye? Anything distracting you from the typical verticals that you would typically stay focused on?
Yeah, I think the way that we're thinking about it is, and we're spending a lot of time in AI data, and it's more so the democratization of access of capabilities that is possible within emerging markets. As an example, with let's say medical AI. And so our lens is less so, the scaling path, I think, initially is through developed markets. But the way that we think about it is how does this capability become more readily available in emerging markets? So we made an investment in a medical AI company called Meadow recently. And what they're able to do is, take an ultrasound, but you don't have to be a specialist sonographer to be able to use it. You can just, they kind of like stitch images together such that in emerging markets, you can have a really junior nurse being able to take that ultrasound without having that depth of experience and have, a high quality result. Another company that I really love, it's not one of our portfolio companies, it's actually a Blackbird portfolio company called Harrison. The scaling path is absolutely, medical AI into US and Europe and those sorts of markets, but with an absolute intention from day one of bringing that technology to Vietnam, to Indonesia. And so, that's what really, makes me excited. We can have top quality healthcare driven by technology that democratizes that quality of care into markets that wouldn't be able to afford it.
Very interesting. And Shwetank, I guess you sort of touched on the thematics that you're interested in before, or that you typically focus on. Are there any other emerging areas of interest for you at Leo Capital?
Yeah, I think not a lot to add to all the wonderful areas that have been mentioned, but we are still excited about commerce, and especially the interaction of live commerce and social commerce to really change the way a large part of the next billion shop. And that's a theme that we're actively investing in, especially as people move away from intent-based shopping of the Amazons of the world to sort of more discoverability and more the social graph driving the purchases.
Sounds like you and Tolo should chat. I don't know if you can tell, but he's a mad shopper. And Jace, what are you seeing? I guess, you know, having this benefit of, sorry if you can hear my children outside jumping on the trampoline, by the way. What are you seeing as far as all of the companies coming through using Cake? Are there any trends that you're actually identifying in terms of specific industry verticals?
Yeah, so, you know, at Cake, we're not, I guess we do work across the ecosystem. We work in a lot of accelerators, so we can see where, you know, the investment's happening in Australia. You know, obviously, you know, we're good partners with Startmate, so I'm loving the whole, you know, climate aspect that's happening there. Personally, I think if we look at the top 20 biggest companies in the world, fast forward 10, 20 years, we're going to see some significant representation in there from this sector. So I think there's some really strong tailwinds there. Look, something a little bit closer to Cake's heart, and like Alicia mentioned, you know, we're quite conscious of the fact that, you know, the blockchain space and the equity space are, you know, reasonably, you know, closely adjacent. We haven't seen, you know, where that, you know, the sort of digital asset of equity and crypto really go together perfectly yet, but it's something that we're really keeping an eye on. And we think that, you know, there's some fantastic trends with the velocity of money, you know, that you can see in the crypto space that we'd love to bring into the traditional capital market space, you know, where technology, you know, can really enable a significant increase in equity and payments globally. So not just, I guess, talk too much about our own space, but I think that there's a lot to be done there over the next 10 years. So yeah, definitely keeping an eye on that. But at the moment, you know, the NFTs and things like that are confusing and distracting me a little bit. But we hope that there's some real tangible outcomes from the way, you know, equity and the blockchain space interact in the next little while.
Yeah, NFTs, the word distraction has taken a whole new meaning on when you start to dive down that rabbit hole, for sure. There was a question in the chat I just wanted to draw attention to and jump back to Tolo. Claire's asked around deep tech, is interest in this space driven by the fact that it's not so easy for your FANG companies to dive into this space, or it's not necessarily their mandate to be exploring these areas?
In a sense, that's a loaded question, because I think that the reality is that many companies like Google and, you know, Microsoft do actually do quite a bit of exploration in, you know, deeper, more fundamental technologies. But, you know, I think at Blackbird and me personally, you know, I've never seen the fact that one of the FANGs can do something as a reason for another team not to be able to do it, you know, much, much better. So in a sense, it's something to be wary of, but, you know, oftentimes if you're picking the right team and you've done the work to understand, you know, what makes their particular approach special. So, you know, what's their secret about the world, that thinking too much about what the FANG might do is actually an unnecessary distraction. So, I mean, the short answer to that is that's not really why we look at it. It's something worth noting, but yeah, it's you know, I think we could have an hour-long discussion about that topic alone.
Cool. Well, maybe next Starfest, Tolo is keen if anyone wants to put that together.
That'd be a good one. That'd be really good.
That does sound good. And there are a bunch of questions coming through on the chat. I just wanted to acknowledge I'm not going to be able to get to all of them because there's just a little bit of time left, but perhaps for the panelists, if you're checking the chat and have any direct comments to make on some of the comments that are in there, that would be great. I just wanted to pick up on the thread, Jason, that you started to touch on. And I guess expand on that fact, you know, the way DeFi is changing the opportunities that we have to kind of spread equity differently across individuals who are making contributions to companies. And of course, there's this broader thematic around DAOs, you know, decentralized autonomous organizations. The thread of decentralized VC is something that I think is really interesting to pick up on, and you know, even the notion of solo capitalists. Would love to kind of throw that out there. Where do we think venture capital as an industry is heading? Does anyone want to volunteer to pick that thread up first? Not all at once.
I'm happy to lead, but like this is an area where, in my role, I've had to intentionally bury my head in the sand to a degree, because the crypto space is incredibly distracting for a person in my position, building a, you know, like a traditional equity software business. So we started out, you know, in 2017, 18, spent a lot of time in ICOs, building projects and DAOs and whatnot. And we have some very good ideas and expertise in that area. We've spent time, you know, understanding how Cake interacts into that space. But I think that, you know, there's still some time to go before we're going to see some meaningful integrations. The key for me is that we need to, you know, we need to get the regulator and the legal agreements and get the cap table, you know, really nicely tied up, so that then we can, you know, put this decentralized superpower on top of it and have it actually connect into the traditional systems in a meaningful way. I mean, that's where Cake really intersects with it. There's also some much more disconnected, you know, attributes to it as well. But that's sort of where Cake's at with the, you know, with the blockchain space at the moment. I also might just put Afterwork out, you know, in the Australian ecosystem, and just sort of highlight a little bit. They seem to be taking a bit of a decentralized hive mind approach, you know, just providing a little bit of additional, you know, color and interest to the way things are evolving in Australia, which has been cool. Friends of ours as well.
And do you think that there's a risk that international markets move faster than we can and will in this space, Jace? Like, are you seeing more occurring in the US that will progress the ways this can be done in the future?
So the AngelList guys have their spin-off Republic, and they did a pretty big round. I think it was around 40 million, and they're quite tied up with the Algorand, you know, blockchain and community. And so we're quite, you know, just keeping an eye on that. I think it's got some potential. For us, it's more a case of, you know, what's the real benefit? Where's the benefit to the customer? Where's the benefit to the end user? And so we haven't necessarily seen that come through yet. There could be a benefit to the founders, you know, in bringing through a bit more crypto and being able to raise a bit more money. But we're just watching the use cases and looking for, you know, for where that might come through. We were looking at the security token space as well, but again, works very, very slowly, because largely the hand of the SEC came down and really put a blocker on that globally, from what we saw. And perhaps people have more, you know, up-to-date information on that. But I think the regulators really slowed things down. And that's where I was kind of making the point, until we can bring the regulator along and utilize this power, this velocity, but connect it in the right way, where, you know, we're not going to make too much progress. But we think that we'll get there. And look, to be honest, I think the way international markets operate from a speed perspective is an advantage for them. But I would hope that we can hold our own, and Cake's going as fast as it can. But if anybody wants to help, we're all ears.
That's awesome. Thanks, Jace. Any other comments? Anyone long VC, bullish on VC being here to stay, or do we think this model will shift? Tolo.
Yeah. So I think Jason hit the nail on the head. You know, my view is that all of the models have merit, and, you know, decentralized models like Syndicate DAO, as an example, is, you know, a really interesting example. But at the end of the day, you know, the model itself, so the abstract concept, is not going to define success or failure. It's going to depend on the quality of the customer experience that you offer. If you're efficient, thoughtful, and you can earn the trust of founders that you support, then I think as an investor, whether an individual or as a group or in some decentralized mechanism, there's going to be a path for you to succeed. But yeah, I wouldn't focus so much on, you know, the model itself. I'd focus more on the customer experience, and the point at which the model enables a richer customer experience, then, you know, that might, you know, that might be something that's worth exploring. But I think to this point, you know, no models shown me a clear path to that.
Peter, did you have a comment there?
Yeah, I'd just to echo that from Michael, which is, look, the march of technology is ever towards the reduction of friction. And so to the extent that these models reduce friction in whatever way, you know, it will be helpful. But it could be something as straightforward as, you know, network effects for, you know, Carter or Cake, all the way through to, DAOs and new ways to therefore reduce friction ongoing, such that access to capital and liquidity is much easier. But I would say that this business that we're in is fundamentally about people. And so that experience where you're on whether you're on the founder end or you're on the investor end, I think that what we're going to see is less and less about the brand and more about the specific people that are involved. Which particular partner or investor are you working with? What do they bring to the table? Table stakes are being founder friendly and do no harm, and that's all table stakes now, and rightfully so. But how can you specifically help in whatever particular way that is relevant and meaningful at this particular time for this company? I think that's really what's going to shine through.
Great insights. Thank you, Peter. There is one question just from the chat, which I'll bring up because it's come up a couple of times. People asking around the talent availability or lack thereof. Is that actually impacting investment decisions right now when you think about a team's ability to scale up with the right people? Has anybody had experience assessing whether that's an issue or not in terms of making an investment decision?
I think to my point earlier, we are seeing more and more talent in Australia. So I think that the talent is, whilst there's probably never enough because there's so much demand and so many strong startups coming out, we are seeing the talent. I think the challenge right now is it's a very fierce talent market. There is, the best companies are having to fight to retain their top talent. Salaries are going up. And so in the sense that we would consider that in our investment process is always part of our investment paper, and a key part of our investment paper is, can the founders build a strong team around them? Can they build a top culture and build a strong team around them? And I think that is just becoming a harder and harder thing to do. So the bar's getting higher and higher. So is it something that we think about? 100%. It's always been something to think about. I just think the war for talent is getting a bit harder, and so you have to fight even harder to keep the best ones.
Sure, thank you. We're going to jump in there as well.
Yeah, nothing to really add to that. I think it's a key decision-making sort of factor, the ability of the team to attract talent. It's really hard these days. People in India are giving away BMWs to retain engineers. This is true. So it is really hard. And I think it's really about the ability to build a sense of purpose in the overall team, so that it's a little bit more than just about the specific role or the remuneration. But it's a tough sort of talent market, I think, globally. Not a single market which is easy to hire and retain. I think retain is even the harder challenge. Still easy enough to hire, but especially in India, we are seeing the retention just being a major headache.
Tolo, did you have a comment?
I was just gonna say that we're now seeing, I suppose, the first cohort of natively distributed teams. So companies founded over the last 16 to 18 months that almost have no nexus to a particular geography. So when you combine that with a really clear and compelling purpose, then in a sense that unlocks a lot of talent for you because you've got a global pool to draw from. So we are seeing a couple of companies in the portfolio really benefit from that, but it brings into sharp focus the importance of clarifying that purpose, making sure it's impactful, and building a really strong global employer brand.
Fantastic. We are actually at time, but if I can be cheeky, I wanted to ask one more question of the group, as long as nobody needs to drop off in a hurry. I guess so. We've talked about maybe we're not heading to decentralized VC just yet. There's a whole bunch of kind of limiting factors, and as Peter Riley pointed out, it's really just about efficiency gains at this point. If we can kind of make the whole process more seamless, but what ways has the venture capital industry changed? Over the last few years, I can think of some more obvious examples, which maybe I'll throw to you first, Alicia, to kick it off. The lens on diversity in the venture capital industry globally, but of course, the home market. We've seen such a significant change since we were doing events together a couple of years ago with the small few women particularly, but then of course there's other indicators of diversity as well. But I think our ecosystem has become incredibly, moved incredibly further forward on that front. Would you say?
Yeah, and I think there's always more we can do, and you never want to say that we're finished on that change. But I think it is a positive note to finish on, that there has been a big shift in the time that I've been in this ecosystem, which was 5 years, just such a massive shift. I think a big part of that is the generation of gender diverse partners, myself and Jax at Airtree included, and then our peers at a number of other funds. It takes time to build that homegrown talent. And so even though the best of intentions were there, it's not something that can be changed overnight. And I think it has taken a number of years to flow through, or at the point now where we're starting to see the effects of that. And it's great to see. There's always more that can be done, but it is a positive trend that we've seen in the last handful of years in particular.
And I guess not just on the diversity side of things, but the maturation of the VC ecosystem in Australia, and I would say in the region more broadly. There have been a number of other things that have occurred. I guess there was a kind of backwater VC kind of analogy to our ecosystem in the early days, like the Wild West, where there wasn't enough capital and founders not necessarily getting the best terms. Certainly, I think we're a more founder-friendly, founder-forward market. Are there any other kind of observations for those of you who've been in this ecosystem a while now?
I'll jump in
Jace,
quickly and just say, look, even as a regional founder, the first couple of years for me on the Gold Coast was like so hard. And it wasn't until I, got to Brisbane and got to Sydney and then benefited from Startmate becoming virtual. And, these sorts of things have been unbelievably critical to our success to date. And so, yeah, I think just regionalization and the virtual and remote aspects of venture have really leveled the playing field a lot. And I'm sure I'm not the only, founder that's not in Sydney in Australia that has felt the awesomeness that can bring.
Yeah, that's a great observation, Jason, and definitely true. Shwetak, anything that's occurred significantly in the Singapore, or I guess the Indian VC ecosystem, since you're exposed to that as well?
Yeah, I mean, adding to the points you mentioned already around diversity and just more sources of capital, I think it's the transparency has gone up a lot. So we see a lot less founder-unfriendly term sheets. Those are called out faster. So the whole ecosystem has become a lot more, I think, founder-focused, which is a great thing. And having been a founder in the early 2010s to being a VC now, the ecosystem has certainly improved for the better. And, I hope it continues to do so.
Peter, any thoughts from you?
Yeah, just to echo those thoughts, I think the diversity in relation to different perspectives is so important. It means, I think, better access to different types of investments, hopefully better judgments in relation to those investments, and better help with respect to those different types of companies. I also think the diversity in funding sources and funding structures is really helpful for founders as well. We've got angel syndicates now more so than ever before, and more active than ever before, like Flying Fox and Archangel and those sorts of syndicates. We've got Tractor Ventures that's providing invoice financing and other invoice financing that we're seeing in the region as well. We're seeing micro funds of 5 million, 10 million, really specialize in different areas of particular product. So I think all of this diversity is helpful for the ecosystem. I'd love for it to be much, much more. I'm hoping for this to be supercharged. If I think about, 10 years ago, 2011, it was certainly a wasteland in Australia and in the region. And now to see the scale of funds that we have, to see, Lauren and Batco and friends on the cover of, a magazine trumpeting the system.
So
right?
good.
I mean, all of these things, it really does make me feel hopeful for what it's going to be like in 10 years to come.
Yeah, Vogue did not do my hair and wardrobe today. Sorry, guys. And Tolo, any final thoughts from you on that?
Well, I think in a sense, I'm relatively new to the ecosystem, having just come back from the Bay Area, and before that, spending my time investing into the US and China. But I think the thing that stands out to me is how similar the current state of the Australian ecosystem is to what you see, offshore. So it's rapidly maturing. And I think that globalization angle that, we sort of discussed a little bit earlier causes a convergence in sort of standards around, how founders should be treated, the terms that founders should accept, and general measures of value for what, venture investors can and, should provide to the founders that they support. So, I've loved every moment being back, and, as I think Peter mentioned before, I think there's a whole bunch more growth to come. We just kind of can't take our foot off the pedal.
Fantastic. Well, that feels like a good note to end on. I'll hand back to Cal, but just to summarize, it feels like the key messages from today were there is plenty of money around for those of you seeking to raise capital, whether it's Australian sources of funding or overseas, but you are operating in a context which is not just Australia against the world. You're sitting in a region which is getting increasingly competitive as far as the caliber of founders, the speed of execution, and potentially the kind of inbuilt hustle of the founders doing that as well. So you better make sure you are solving the right problems. As Alicia pointed out, there's so many things still requiring disruption, needing really good minds to be focused on. So make sure you're chasing the right issues, and then of course finding those venture backers or other sources of funding who are the best partners for you on that journey, because as Peter just pointed out, there's an increasingly diverse array of ways that you can get your startup funded or moving forward and getting that momentum. And these wonderful folk here are also willing and able to support you on that journey. So thank you, Michael, Peter, Shwetank, Jason, and Alicia, for all your incredible commentary. This was a fantastic conversation. And thanks to Cake, of course, for pulling us all together. Back over to you, Cal.
Thanks, Lauren. In particular, thanks to you for your work in facilitating the discussion. We covered so much in here, and thank you very much to the panel for being so generous with your time, and for everyone joining us. We will distribute a recording of the event today. So, there was so much ground covered here. I'm sure there's stuff that people will want to go back and see. So we will send that out. And just thanks again for everyone being so generous. We're really privileged to actually facilitate the discussion today and the amazing insights that came out of it. We are truly in an exceptionally dynamic time in terms of the VC space at the moment. And I can't wait to come back next year and actually see where we are, do the pulse check again. And we're also really pleased to be doing this as part of Spark Festival as well. So that's awesome. So thanks very much. Talk to you soon.
Thanks all. Bye.
Thanks. Bye.
Bye.